Every day, millions enter the financial arena armed with charts, indicators, and a semblance of a strategy. Yet for the vast majority, the opening bell signals the start of their demise. The meticulously rehearsed plans evaporate, conviction shatters, and the market consumes them. The stark reality is that 95% of day traders lose money, a statistic more unforgiving than any casino. This isn't a game of predicting patterns, it's a battle against oneself. The market is not an adversary, it is a mirror, reflecting one's beliefs, ego, and unresolved inner conflicts. The most legendary traders didn't possess a crystal ball, they mastered themselves. This is a blueprint for the alchemy of identity, revealing how to transform from a market victim to a force it cannot break. 1. The market as a mirror. The market is indifferent to your financial aspirations. It holds no opinions, no grudges, and offers no mercy. Its sole function is to reflect the trader's inner state, their hopes, fears, desperation, and arrogance. Many believe they are analyzing price action, when in reality, the price action is analyzing them. The traders who succeed are not just students of the charts, but students of themselves. They recognize that a reckless trade may be a reenactment of a need for validation, or that holding a losing position too long is an inability to admit being wrong. By journaling emotions alongside trades, they uncovered their internal patterns, the triggers for fear, and the catalysts for greed. In this light, a blown account is not a market failure, but a manifestation of an unchecked impulse. Trading thus becomes a form of therapy, one that is brutally honest but ultimately transformative. 2. The courage of cowardice. Contrary to popular belief, the world's best traders are not daredevils. They are masters of self-preservation. Their primary focus is not on the potential for massive gains, but on the ever-present risk of loss. Legendary traders like Tony Saliba, who turned a modest account into millions, did so through an obsessive, almost paranoid control of risk. They reduced their position size after a string of wins to guard against overconfidence, and will exit a profitable trade if it feels too good to be true. The amateur believes courage is holding on. The professional knows it lies in letting go, of bad trades, of pride, and of the need to be right. The real danger isn't losing, it's the hubris that follows a win. The mantra on the trading floor holds true. The quickest way to a small fortune is to start with a large one and no risk management. True mastery is found not in bravery, but in a healthy dose of fear that keeps you sharp and, most importantly, in the game. 3. The myth of the Holy Grail. The perpetual search for a perfect, one-size-fits-all trading system is a hallmark of a losing trader. They cycle through strategies, RSI, Fibonacci, Wyckoff, blaming the system when it inevitably fails them. The legendary traders interviewed in the New Market Wizards had vastly different approaches. Some were technical, others relied on intuition. Some were short-term scalpers, others long-term position holders. Their common thread was not a shared system, but a deep self-knowledge that allowed them to find an approach that aligned with their individual psychology, risk tolerance, and emotional temperament. Forcing a trading style that doesn't fit your personality is akin to running a marathon in shoes that are 2 sizes too small, a painful and guaranteed path to failure. The Holy Grail is not an external system, it is the alignment between who you are and how you trade. This requires honest self-assessment, a task many avoid in favor of the easier path of imitation. 4. From ruin to riches, the Phoenix journey. Nearly every market wizard has a battle scar, a story of a blown-up account. They have faced not just loss, but complete devastation. In the wreckage of their finances and confidence, they were forced to choose between quitting and transforming. It was this pain that became their crucible. The loss shattered the illusion of their own invincibility and forced them to rebuild with a newfound humility. As Bruce Kovner, a trader who turned $3,000 into $300 million, noted, one of the worst things for a new trader is a big win on their first trade, as it breeds delusion. Early failure, on the other hand, builds character. The pain of a significant loss becomes the curriculum for sound risk management. In this way, a blown account is an initiation. The market has tested you. The question is whether you will flee from the lesson or rise to meet it. On the other side of that devastating loss lies a new version of the trader, one who no longer fears the market because they no longer fear themselves. 5. The art of losing. The most profitable traders have mastered a counterintuitive skill, the art of losing. For the amateur, a loss is a final verdict on their ability. For the professional, it is simply data. Marty Schwartz, who turned $40,000 into $20 million, lived by a simple rule. If a trade goes against you, get out. No rationalizing, no hoping, just a swift exit. He had no emotional attachment to being right. His focus was on trading well. And trading well meant losing quickly. Losing is an inevitable part of trading. Prolonged losing is a choice. The great traders don't avoid losses, they absorb them with discipline. A small, controlled loss is a sign of a well-executed plan and respect for risk. In fact, some of the most successful traders have win rates below 40%. They make their fortunes by ensuring their winning trades are significantly larger than their losing ones. The ego hates to lose, but the market demands humility. A seasoned trader knows that a loss isn't the end of the world, it's just another day at the office. 6. Intuition, the reward of experience. The notion of a trading genius who operates on pure instinct is a romanticized myth. The intuition of a seasoned trader is not a magical gift, it is the product of memory. It is earned through years of market exposure, emotional conditioning, and thousands of hours of pattern recognition. What appears as a gut feeling is actually the subconscious mind's rapid synthesis of countless past trades. This is what neuroscientists call implicit learning. It's the same faculty that allows an athlete to sense a shift in momentum or a musician to anticipate the next chord. However, this finely tuned radar only develops after years of diligent feedback and review. Beginners often mistake impulse and adrenaline for intuition. True intuition is quiet, not urgent. It is the reward for a long and often arduous apprenticeship. Before you can trust your gut, you must put in the deliberate work of mastering the fundamentals. 7. The peril of confidence. The most dangerous moment for a trader is not after a loss, but after a string of wins. The feeling of invincibility, fueled by dopamine, leads to the fatal thought, "I'm going bigger on the next one." Overconfidence, particularly when it leads to increased position size, is the silent killer of trading careers. Size amplifies not just profit, but emotion. A position 5 times the normal size can turn a calm, disciplined trader into a bundle of nerves, where every tick of the chart feels like a physical blow. The carefully crafted plan dissolves and survival instincts take over. True professionals treat position sizing with the same precision and caution as a bomb disposal expert. They understand that the goal is not to get rich quickly, but to stay in the game long enough to get rich slowly. A wise trader even has a rule of sizing down after a win to guard against ego inflation. The greatest risk in trading is not the market itself, but the version of you that emerges when the stakes get too high. 8. Trading as a spiritual dojo. Ultimately, trading is not about money. It is about self-realization. Behind every chart and every trade lies a deeper question. Who are you becoming? The market tests not just your strategy, but your character, patience, discipline, and integrity. The journey of a trader is a spiritual initiation, not with incense and robes, but with the harsh realities of red days and sleepless nights. It is a direct confrontation with your shadow, your need to win, your fear of being wrong, and your hunger for control. Every trade is a mirror, and every loss is a teacher. Through the repetitive practice of showing up and facing your flaws, you learn detachment, humility, and presence. The moment a trader stops needing the market for validation, they begin to find true success. The actions may look the same, buying low and selling high, but the person taking those actions has been fundamentally transformed. 9. Process over outcome. The most successful traders often appear boring in their execution. They're not chasing the thrill of the win, they're honoring their process. The moment a trader becomes fixated on the result, they betray the very consistency that led to their success. A disciplined trader's identity is not tied to being right, but to showing up and executing their plan with precision. This is where trading becomes a ritual, the same routine, the same setups, the same risk-managed trades day in and day out. This is not robotic. It is a deep respect for the rhythm of the market and the understanding that an edge lies in repetition. A day of following the process perfectly, even if it results in a net loss, is considered a successful day. When you fall in love with the execution, your self-worth is no longer tied to your profit and loss statement, making your psychology resilient. 10. The dance of conviction and surrender. Conviction in one's trading ideas is essential, but it is only half of the equation. Conviction without flexibility is a recipe for disaster. The most successful traders hold their ideas with a light grip. They act with boldness, but are prepared to pivot instantly if the market proves them wrong. There is no ego, no doubling down on a losing position, just a swift and decisive change in direction. This is not indecision, it is a dynamic balance between deep commitment and immediate detachment. As one trader aptly put it, their biggest edge is their ability to change their mind faster than anyone else. In a constantly evolving market, stubbornness is a liability. The practice is to predefine exit criteria and adhere to them religiously, and to reevaluate your market bias daily. The mantra is strong opinions loosely held. Flexibility is not weakness, it is a superpower. 11. The anti-guru principle. Anyone seeking a single, definitive trading system from the market wizards will be disappointed. The striking discovery is that none of them trade in the same way. Their success stems not from following a guru, but from becoming their own authority. The real wizards of the market understand that what works for them could be detrimental to someone else. Their systems are tailor-made for their own mind, emotions, and weaknesses. This level of self-knowledge cannot be downloaded from a course or copied from a signal service. While learning from others is valuable, the principles must be filtered through the lens of one's own personality. To blindly follow another is to abdicate the responsibility of your own growth. True freedom in trading comes not from finding a better leader, but from learning to lead yourself. 12. Forging your own legacy. The legendary traders were not born with a special gift. They became different through a relentless process of self-discovery and refinement. Their magic was their process. Their superpower was their self-awareness. Trading became the vessel for their personal evolution. They learned to sit with discomfort, move through fear, and rebuild from collapse. In doing so, they grew not just as traders, but as human beings, evident in their humility and quiet confidence. The ultimate question is not whether you are learning to trade, but whether you are becoming a trader. The latter is an internal identity shift. The new scoreboard is not measured in profits, but in how quickly you cut losses, how calm you remain in the face of panic, and how disciplined you are to not trade when there is no edge. The final form of a true trader is not someone who beats the market, but someone who no longer needs the market to feel whole. As the legendary Paul Tudor Jones said, "Don't focus on making money, focus on protecting what you have." This is not just trading wisdom, it is life wisdom. Your next trade is a decision, a step into the identity of the trader you are destined to become.